I think China might be at that point where there's just been too much spending on projects that don't really earn a living. And so the repercussions of that will be interesting.
What do you make of what's happening in China? Because there are some folks who say this is the last decade of China's ascent. It's going to be all over. Jim Rogers is going to be here. He says, well, I mean, that they have some potential if they open up the currency. What do you make of what's happening in China?
I am not, awfully positive on the economy of China at the moment. And it's just really that there's quite a history of malinvestment in China. We've seen the country do amazing things. There was amazing growth. And how that worked was when the economy started opening, 20, 30 years ago, basically a lot of money came in, and everything that was spent, all of the investment that happened was desperately needed, and so it was spent well. Any project you threw money at, it just bloomed, and so the country saw this amazing growth. But about 15 years ago, the country had sort of reached the end of its need for investment, right? Because there's a variety of things that will cause growth in an economy. But the problem is that if you decide that the only thing that will work is pumping money in, we just have to spend money, the problem with that is you reach a point at which there's enough money, right? Of which every project that needs to be built, the first hotel you build, it sells out because there's a need for hotels. But if you keep building hotels and hotels and hotels, eventually you build too many. And so that's really what happened with China. And it kind of happened 10 to 15 years ago. They just were overspending. And the real problem, the essence of the problem is that they target economic growth. They target GDP. They basically say, here's the GDP number that needs to be hit. And they instruct the government officials to go out and find ways of hitting that, right? And you can always do that. Like if you pay a guy to dig a hole and another guy to fill it in, that's GDP, right? That's growth. But it's not good. It's malinvestment because, of course, the hole that was dug and filled in has no economic value. It doesn't produce any cash flows. And so throughout China, there's a lot of people in the West and they look over and they go, look at all these high-speed trains, look at this amazing infrastructure. And it is amazing stuff, but the problem is there's not really a need for that. And so you build all this stuff that there's no need for. Firstly, you've overspend, and secondly, there's kind of upkeep associated with this. And this, by the way, is a thing that's happened throughout history. If you look back at the railway booms that happened in both Europe and the United States around the 1900s, they built railroads everywhere. They built competing railroads, with two lines next to each other. And the assumption was that just everyone would get everywhere on the railroads and they'd all be hugely profitable. And then not so many people needed to go everywhere on a train. And so, you look at the old maps, if you look at, 150 years ago, the United States had way more rail than it has today. What happened to it? It's like, well, they were bad investments and eventually they pulled up the tracks, it just didn't make sense anymore. And I think China might be at that point where there's just been too much spending on projects that don't really earn a living, and so the repercussions of that will be interesting.
Here's my concern, because you say Westerners look and say, wow, they have a lot better trains than we do, or they have that. I look at China, and I think a lot of people in the West, and part of what we want to challenge in an event like this, is that people say, well, if China didn't figure out the GDP growth, that all the non-Western countries, it's all just digging a hole and filling it back in. And people say, well, why would I want to go somewhere else? Why would I want to invest somewhere else? Because China did that. I think they kind of extrapolate that too. Any other emerging economy must be fudging the numbers, must be wasting money. How do you address that?
Well, frankly, in any economy and in emerging markets, there's greater risk of corruption, but equally there's sort of a promised higher return, But it's a bit of an interesting thing because a lot of the time, how do you get a good return out of an investment? You're often putting money in a place where other people aren't, right? Like, you're taking a risk that other people won't take, and basically you get a high return for that. But the last, I don't know, like decade, you look around the world and basically the cost of capital has just come down and down. There's kind of money for everything. Like any business you want to start, the only businesses you can't raise money for must have the most god-awful business plans ever. Over the last decade or so, like we've got these zero interest rate everything, right? I made a video on my channel called, Blitzscaling. And it's all about this idea in Silicon Valley where they throw money at, things like WeWork. It's an office building, right? And they claim it's a tech company. Why is it a tech company?
It's a whole new way of humanity.
Yeah. There's a guy who looks like Jesus, and he talks Silicon Valley language, and it was meant to be a tech firm because there's an app and a beer tap, which is different to a normal office building. But the problem that you have with that is you hose money at these businesses, and you get to kind of do that in this zero interest rate environment because it basically, there's no real cost to that capital other than if the guy utterly wastes it, which he did. But we've seen this thing where like every business plan gets a go because the cost of capital is so low. Now we're seeing the cost of capital go up, and it's sort of like the tide going out. And, it used to be, we'll say it a zero interest rate environment for businesses. If you give someone $1 and they give you $10 back in 40 years, that's a good return because it's a zero interest rate environment. Well, if the interest rate is higher, if you could make way more money than that with your money in a treasury bond, well, then suddenly those cash flows way out in the future are sort of worth nothing, right? Or they're worth very little. That is, definitely a thing we're seeing in places like Silicon Valley. And there's a lot of people panicking. And, you listen to the kind of VC guys and whatever, and they're like, well, this is madness. When will interest rates go back to their normal level of zero?
It's normal for when?
It's sort of like the patient has been on a heart machine for the last 5-10 years, and people are like, well, it's quite natural to walk around on a heart machine. It's like, no, that's not a healthy patient.
Do any of those people, though, say, you know what, we're going to put our money in economies where they're building actual stuff, and the cost of capital is like at a certain point, you would think they would say, you know what, Indonesia looks interesting.
I have a friend who is an emerging market fund manager out of London, and he invests a lot in Africa, and he's done quite well there because, once again, you've got an actual risk-return thing happening there. I recently made a video talking about sovereign wealth funds, and historically, the way investment has worked is that kind of very developed countries have these sort of big businesses, they've thrown off a lot of cash, and then they take that money and they invest it in sort of high growth developing economies. Well, in the last kind of decade, you've got this funny thing where a lot of the sort of developing economies have this huge amount of money because they've all run surpluses. And so they have this huge amount of cash, and they start a sovereign wealth fund and invest it in the West. And it's a rather strange thing, that normally the money would come from like the stable environment to the high growth environment, while instead it appears to be coming from the high growth places and being put in treasury bonds in the United States.
Let's start a golf tour in the U.S. or whatever.
A Formula One team or an EV startup or something. But
one of these many things like someone paid for an NFL American football team $6 billion, wasn't it recently? I mean, those were $10 million or something 40 years ago.
It's crazy. But, if you look at even like the scandal we were talking about earlier, the whole FTX thing, like talk about hosing a guy with money, right? You take a guy who has about 6 months work experience at Jane Street and, quite a look. And you say, well, he must be a genius, look at him. And so you give him a fortune, and he squanders it and, spends it on political influence and sponsoring sports teams and, hiring spokespeople. But, once again, you've got a business that there was, a business that historically would never have been funded, where suddenly, zero interest rate environment.
I just see so much less of that around the parts that we're in now. Obviously, you could say there's corruption. To me, it's like we make rubber stuff. We haul garbage. We do stuff like that, not like we just give some guy with a crazy hairdo who looks kind of weird a bunch of money and he's the Messiah. Yeah. I don't know that they have that in some of these more functional. I don't think they have the luxury.
in the very long run, if you want to break sort of the stock market into two easy components, we can talk about growth and value. And the truth is, most of the time, growth does a bit better than value because it's kind of investing in exciting businesses and there's risk there. And so you get rewarded for your risk. In the longish run, you often see sort of similar returns from growth and value. One performs well for a period, then the other does. We're now at a period where we've almost never seen value underperform as much as it has over the last kind of 15 years or so. So, it might be reasonable just as an investor to also say, there's sort of times to kind of bet on the exciting things and there's times to bet on the boring things.